and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Julia Lee from Bell Direct. And what a day it's been. We've seen the market really on a tear and the material sector a standout. We saw iron ore prices up by 4.2% overnight to $138.70 US a tonne. Can this run continue? The mining sector has been one area that hasn't been doing so well in 2013. In fact, the material sector, the only area in the red with a loss of 6.9%. So are we going to see a reversal of those fortunes? Joining me in the panel, on the panel tonight, we've got Peter Escher from Invest and also Nick Radge from the Chartist to talk about the market. Welcome to the market. I mean, Nick, starting off with you, the market's been on such a good run. A lot of people are going to be asking themselves, is this the start of something big?
We can only hope. We can only hope. I think a major thing we're seeing this time, which we really haven't seen before, is the small ordinaries have really, as you said, been on a tear, and they've really bounced back strongly over the last 3 or 4 weeks. It's great to see. Any pullback we've had in the last month or so is very, very small, and that's also a very good sign. So, yeah, the fact that we're seeing really good momentum in the small ordinaries gives me a lot of faith that potentially we're going to test all-time highs, or not all-time highs, but recent highs in the broader market as well. So it looks good. Okay,
so looking good. Are there particular sectors that look better than others?
Interesting you say that. The energy sector is really what's coming out on our momentum models at the moment. In fact, my portfolio, I think we're pretty well 50% allocated to various energy type stocks. So there's obviously a lot of strength through there. But after today and yesterday, we're starting to see a lot of other broader sectors coming through. But the one that's really stood out in the last month or two has certainly been the energy sector.
Okay, let's talk about Commonwealth Bank. Just looking at Commonwealth Bank, Nick, and this is a stock that's up 34% over the last 52 weeks. I mean, earnings haven't been growing that much, but we've seen the shares obviously supported by the higher dividend yield compared to the rest of the market. Can this run in Commonwealth Bank, do you think, continue?
I think so. I think so.
Yes?
Interestingly enough, we hold it in 3 of our different portfolios for 3 different reasons. Our longer-term momentum portfolio, the growth portfolio, we're in at around the $51 mark from April last year, so we're still running that. We're testing all-time highs in the Commonwealth Bank. We're also running in one of our dividend models as well. We've got ex-div coming up in a couple of weeks' time, so we're holding it for that, and also on a discretionary. There's some good pattern structure there as well. So, yeah, I think we're going to see all-time highs, and I think the market's been looking forward to tomorrow's results.
Okay, so looking pretty good for the Commonwealth Bank.
But even so, I think if there's going to be any negative reaction, it's going to still be reasonably well supported. Maybe not tomorrow, but on any weakness with that yield, it's got to be supported.
That's right.
Okay, so Commonwealth Bank, the big one to watch tomorrow. We also hear from CSL as well as Leighton. So Wednesday, the big day of the week for earnings. We do have our first caller on the line. We've got John from Redcliffe on the line. John, welcome. What's your question tonight?
Oh, hello, panel. I'm wondering what you think of Lynas Corporation shares. I bought them a while ago and they haven't been doing much, and they've come online and are started to produce their rare earths, but the prices continued to go south. So what are your thoughts on that stock, please?
I think you've just nailed it, John, on what the problem with Lynas is. I mean, just looking at that share price graph, it's not an attractive looking graph at all. And on one hand, they're looking at ramping up their LAMP, which is their processing plant, but on the other hand, rare earth prices have just absolutely slumped from 2 or 3 years ago. So, Nick, looking at a chart like this, any signs of basing at all?
It's trying to put a base in here at the moment, John, and that's what we want to see. It is sitting below a significant level of resistance of 50 cents. So ideally, we want this base to continue for a little bit longer, and then when we break up through 50 cents, and I think if we can do that, you'd want to add to your position. I think that would look very healthy. There's a lot of these basing patterns going on at the moment. Evolution Mining, Kingsgate, there's a few of them happening, and it's starting to happen here. I'd like to see it go on for a little bit longer, and then if we can break up through 50 cents, I'd add to your position and go for it then. I would be concerned if we start to break down through the bottom of that base. That would be a certain sign that trend is going to continue lower.
Let's go to our next caller. We've got Alan on the line from Maitland. Alan, welcome to the show. What's your question for our panel tonight?
Good evening, Julia. Question concerning Tox-Free Solutions, TOX. I notice it's come back a bit in price in the last couple of months or thereabouts. Just wondering what Peter and Nick think of it as regarding a buy at this particular stage.
Sure, so looking at Tox-Free Solutions, I mean, this is an interesting one. I had to do an assignment on this for my Masters a few years ago, and it was a great looking stock because, you know, the industrial sector as well as the resource sector, and at the time the resource sector was booming, so looking at, you know, potentially toxic waste and getting out of that was a great market to be in. But of course now the catch cry in the resources space being cost cutting and cutting of capital expenditure, how does this impact on Tox? I mean, the shares have held up fairly well. They're down 4% over the last 3 months, but still up 24% over the past 52 weeks. I mean, just having a look, and I noticed that Morgan Stanley is still overweight on the stock with a $3.80 target. Is it a fast stretch to get to 380, Nick?
It's consolidating at the moment, and we're at the bottom end of that consolidation. So if you're an aggressive trader, you could lean against this support, buy it here, place a protective stop down around the $2.90, maybe the $3 mark. Look for it to rotate to the upper end of the range, which sits around that $3.60. The safe trade is to wait for it to break $3.60. If we can break through $3.60, it's a good trending stock when it gets going, but we really need to break out of this consolidation. So $3.60 is the level on the upside. Aggressive trader, buy some here and then add to it on the breakout of $3.60 if we get it.
Okay, so some trading tips coming through from Nick, and we have Adonis on the line from Melbourne. Adonis, welcome. What's your question tonight for our panel?
Hi, Julia. I've got I'd like a technical view on both Rio and Atlas Iron. They've obviously had a really good run of late, look quite overbought, but still a fair way off off their highs. I'm just wondering, does Nick feel that that this momentum, this push-up can be maintained and worth sort of getting now, or would he wait for a retracement and get back in at a more acceptable level?
I mean, a very timely question coming through from Donis, because these stocks have just been absolutely soaring. Looking at Rio Tinto, in just the last 1 month, up 14%, yep. And Atlas has doubled that, up 28% in a month. So, Nick, how do you trade something like that?
And I think that is a very good point there that is being made. These stocks can move, and when they get moving, you don't want to wait for dip, because they're not going to dip. You know, there's an old saying from the trading floor of the Sydney Futures Exchange, don't be a dick for a tick. In other words, don't try and save a couple of cents and miss several dollars, because when these ones get going, they really do rip along. So to answer your question, I think AGO looks great. It's had this basing pattern. I've mentioned a couple of them. Looking at this one, it's doing it again. It's sitting right against resistance right here at 106, but that would not stop me from buying it. It's got good momentum behind it. It's coming out of a base. I can't ask for anything any better. There's no guarantee it's going to get on with it, but the market has a sense of a change of sentiment going on at the moment, and I think you really want to be on that. As for Rio, we did buy that a couple of days ago on one of our momentum models. I don't personally like trading Rio myself. I stick to the smaller cap kind of stocks, but it's running, and there's no reason why potentially it couldn't go back up, test the highs at $70 again. But I would stick to the smaller ones that are breaking out of those bigger bases.
Okay, so both of the stocks looking good, but Nick preferring to trade Atlas Iron. I mean, the iron ore space has been such an interesting place. A lot of analysts had been predicting 100 US a tonne for iron ore. Instead, it's close to 140 US a tonne, and we haven't seen that traditional seasonal weakness, where last year in September we saw iron ore prices dipping back to 87 US a tonne. We do have our next caller on the line, and we have Andrew from Brisbane. Andrew, welcome. What's your question tonight for our panel?
Oh, hi, Julia. I'm just ringing up in relation to Horizon Oil. I bought my stock about mid-40s, mid-40 cents, and I think they're about 33, and there's the share offer for 33 cents at the moment. I just want to get everyone's opinion on whether it's worthwhile taking up that offer.
Sure. So we have Horizon Oil. I've noticed Bank of America Merrill Lynch, they cut to an underperform from a buy and cut their target down 29% to 35 cents. That was on the 1st of August. That was a while ago. And since then, the shares have fallen below that mark. I mean, Horizon Oil, big project in China, the baby project. They're doing a capital raising though. Nick, looking at the share price action, what would you say?
Yeah, Andrew, it doesn't look particularly promising to me. We did ride it up and exited at 40 cents, and it's now just drifting around in a bit of a range, really, from around this 30 cents up to 42. Not doing a great deal, I guess. If you're an aggressive trader, again, you can lean on this support down here at 30. If it breaks 30, you'd want to get out pretty quick, smart. But I would say best case scenario, rotate to the upper end of the range, which sits around 40, 42 cents, and that's pretty well it for the moment. There's certainly no trendiness going on there. The trend will only resume if we can get up through that 46, 47 cents, and that doesn't look likely at the moment. But potentially a trading proposition right here, leaning against the support, but with a nice tight stop loss on it.
Okay, so not a trendy stock, Horizon Oil. Let's go to our next caller. We've got Bill on the line from Adelaide. Bill, welcome. What's your question tonight for our panel?
Oh, hi, Julia. I'm just interested in a valuation and an opinion on Investra, and also interested in some comments on the merger proposal with APA. And does anyone know what the latest is with that merger? The last I heard was that the board had knocked it back, saying that it wasn't a good enough deal for the Investra shareholders. And also, if the merger lapses or falls over, what does the panel think the effect will be on the share price?
Some good questions coming through from Bill, and I guess looking at Investra, some very attractive pipeline assets, and we know that there's a gas boom in terms of a number of projects in Australia, massive gas projects. And if we have a look at Investra as well as APA, both of them have pipelines which deal in gas, so they're looking at the infrastructure. So if you're interested in this LNG boom, do you go for the infrastructure or do you go for the gas projects? How do you trade a stock like this, or do you trade a stock like this?
Yeah, it's a very nice trendy stock. You know, we've been in and out over the last 4 years or so as it's trended up. At the moment, we have a bit of a rule when there's a takeover offer. Specifically, if we're holding a position that comes into a takeover situation, we'll hold it for another 2 weeks, and if there is no further offers from other parties, we'll actually exit the position, take the cash and put it elsewhere. So we give it about 2 weeks, and that's predominantly it, because with the takeover it can sit there for a long time and trade sideways. The one thing with Investor at the moment is lack of liquidity. Now, it popped today to new highs, but it did so on very, very low volume, so I don't think there's a great deal of money behind it. I think you've got to be a little bit cautious. There doesn't look like there's a great deal of volume behind it, so maybe a few little punters out there having a go.
And we have Jim calling in from Perth. Jim, welcome. What's your question tonight for our panel?
Yes, good evening. My question's in regards to PRR. It's a biotech company. It's just a technical view. It's tried a few times to crack that 10-cent mark and it's failed. If we could go, if it does crack 10 cents, and just a basic technical view on PRR. Thanks.
Sure, so technicals are going to go to the technical expert, which is Nick Radge. Prima Biomed, it feels like we've been talking about this stock for decades.
Yeah, it's a popular stock to talk about. Jim, it's stuck in a little bit of a range. You're quite right. I think the level you're talking about is 11 cents. It's popped up there a couple of times and rejected. On the downside, the support is at 9 cents. So we're basically rotating between 9 and 11 cents. If we can break up through 11 cents, then we would expect a run up to recent highs of towards 17 cents. So if it comes back down to 9 again, you could lean against that support, take it from a trading position, but really the safe trade is waiting for a break up through 11.
Okay, so that was Prima Biomed. They're looking at trying to commercialise CVAC, which of course deals with ovarian cancer. The stock code there, PRR. We might go to an email. We've got an email here from Hans, and Hans writes, "Hi there, what does the panel think about Amore Energy? AJQ is the stock code. They're drilling successfully in northern Queensland at the moment. How do you see gas prices developing in Australia in the coming years? Thanks, Hans in the Sunshine Coast." Let's go to Nick Radge. What do you think of this stock?
Hi, Hans. Yeah, well, we hit good day today, big upside day today on very, very heavy volume, which is always a good sign. ran straight into resistance at 31 cents. So we've got to overcome this 31 cent mark, and if we can do that on an extended volume, then look for it to run up to 40 cents. But yeah, it's been rotating around that sort of 24 to 30 cent area for a little while now, so I'd like to get up through 31 to get on with it.
Let's go to our next caller. We've got Tony on the line from Victoria. Tony, welcome. What's your question tonight?
Good evening, Julia. Could I ask the panel about two stocks? The first one being Neon Energy and the second one being Northern Star Resources.
Looking at this one, we might go to a technical view first. What do you think, Nick?
Sure. Well, this is one of those energy stocks I was talking about, Julia. I have it in my own portfolio. We bought it recently. It's not doing a great deal since we bought it, but it certainly has broken out of through resistance and is now consolidating above that, and that's always a positive sign. And if we can get up through 36 cents, then that will confirm the trend is on its way again. So I'd be concerned if it broke back down through 28, but if we can get up through 36, I'd add to positions and keep going with that. It starts to look quite good. Now,
before the break, we were asked by Northern Star, and this is quite an interesting gold company. It's been running very hard over the last month, up by 23%. And if we have a look at this particular company, no debt, and they actually pay a dividend yield of 3.9%. The stock went ex-dividend yesterday, but the stock price even higher today. So, Nick, having a look at Northern Star, what do you make of it?
Yeah, it looks really good. It's sitting right against resistance here. It's tested resistance 3 times, and this time we've sort of been sitting here consolidating for a week or two, and that's always a very, very good sign. So 90 cents is your level, 91 cents. If we can get up through there, I wouldn't be surprised to see it run pretty quickly straight up to 115. The stock trends very, very nicely when it gets going, and it's the kind of stock that I'd like to ride if it did start to trend again. So up through 91, I really like it.
Okay, so looking good from a technical point of view. Let's go to our next call. We've got Jim on the line from Brisbane. Jim, welcome to the show. What's your question tonight?
Thank you, Julie. Enjoy the program. What does the panel think of Kingsgate, please?
Oh, looking at another gold stock. So looking at Kingsgate, recently they came out with a record production result. Looking at the costs here, they look at a total cash costs in the Chartist project at $686 US an ounce. Of course, recently we've also heard of write-downs to their Australian mine, the Challenger mine. I think it was about $300 million worth of write-downs there. So it looks like Chartist in Thailand, their lower cost mine, and their Australian assets, the higher cost area. Looking at the share price chart of this one, Nick, which one do you prefer, Kingsgate or Northern Star?
I like both of them.
Okay.
Kingsgate has had a lot of damage done to it, but again, we've got this basing pattern going on, and it looks like it's about to break out through that upper side of the base around this 180, 181 level, and hopefully this basing pattern is enough to set the foundation to get the trend going again. It's been a pretty big ride down for holders, and it does trend well. Unfortunately, it's been trending to the downside. So I like both of them. Pete mentioned Saracen before. We bought that today, and these ones are starting to move. So Kingsgate, yeah, it looks okay to me. I think it looks great.
Let's go to our next caller. We've got Brian on the line from the Gold Coast. Brian, how are you doing?
Oh, good evening, Julie and panel. I've got 2 stocks that I'm looking to add to my position in, and they're 7 West Media and Seymour White Limited. I'd appreciate the panel's view on those.
Sure. So having a look first at 7 West Media, and, you know, recently there's been a change in terms of the CEO. 7 has had some good momentum, although the printing business is still probably quite a difficult area there.
Yeah, I bought 7 West myself just 3 days ago, so maybe we've both got them. We've got to sell them now. It's broken through a little bit of resistance. It's got momentum behind it, which is what's got us into a brine. There is a little bit of resistance above at 260. Certainly that would be a confidence boost if we can get up through that. But yeah, look, I hold that, bought it 3 or 4 days ago, happy to go with that. Seymour White, do we have time to look at Seymour White?
Looking at an engineering company there, but an engineering company that's been doing relatively well. I mean, they focus on major roadworks, bridge work, and their order book just surpassed $250 million with a new contract, so not looking too bad in terms of their underlying business. In terms of the share price, Nick?
Yeah, difficult with this one, Brian. Very, very liquid kind of stock on the charts there. It is running against the resistance here at 125, 126. Looks like it's going to break up through that, so it does look positive, and wouldn't be surprised to see it run a little bit high, but very, very liquid. It's not one that we actually watch or would take part in.
And we've got Joe on the line from Melbourne. Joe, welcome. What's your question tonight?
WDR?
Sure, WDR. So looking at West Desert Resources, share price doesn't look too crash hot. I believe they're in the Northern Territory. I think they look at things like copper, other base metals. Just looking at the stock price chart, Nick, and what are your thoughts around Western Desert?
Joe, there's a big line of support here at 60 cents. We've tested down around this way 1, 2, 3, 4, 5, about 7 or 8 times. We've come down again. Every time it comes down to 60 cents, it has a nice good bounce. I'm not saying it's going to happen this time, but if you want to take an aggressive position, you can lean against this support right here, place a protective stop just a little bit below 55, 50 cents, something like that, and look for a bounce back up to the top end of the range. The immediate resistance is around 84, 85 cents. If you get lucky, perhaps up towards 105, 110 at the most. But generally this area has held, so I would be concerned if we broke down through there, especially on high volume.
Let's go to our next caller. I've got Craig on the line from Brisbane. The calls are coming in thick and fast. What's your question tonight for our panel, Craig?
Grange, GRR, bought them on the break at 21, just iron ore stock. I'm pretty sure they pay a 1 cent unfranked divvy, and they are producing, so it's one of the better stories here. They've got about 130 million cash. Just thoughts on charts and fundamentals. Thanks, panel.
Let's look at Grange Resources. I mean, iron ore has been moving along very well. Grange Resource, I think, looks at iron ore pellets, which are higher quality but also more expensive to mine. I'm going to take a shot in the dark and say the technicals look great.
I bought it yesterday. Super good. It's $1. This is $5 stock right here. I know valuation.
20 bagger.
It has no debt. They're looking at 2.4 million ounces, getting that run rate up by the end of the year. And most importantly, the iron ore price.
Is that all good?
The iron ore price is looking good.
No debt, that's good?
Yeah, okay, no good.
Let's buy it.
That's good.
Yeah, it's broken out of that range. I seriously did buy it yesterday. We get a good increase in volume. Nice range breakout there, so looking for to continue to run higher towards that 37, 38 cents. There's resistance up at 40 cents. But again, it's a stock that trends very, very nicely when it gets going, so I don't want to be left behind, and I hopped on yesterday.
Okay, so Nick's buying the stock. Grange Resources is an interesting one because it is high quality, which means when the iron ore price falls, Grange usually gets absolutely hammered because the cost of production is usually greater than other iron ore miners. But of course, when the iron ore price rises, it means that, you know, it is profitable at these higher prices. So we usually see a big jump in Grange Resources, so GRR. Let's go to our next caller. We've got Ian on the line from Sydney. Ian, welcome. What's your question tonight for our panel?
I'd like to ask the panel about Alumina shares, which I've held for some time, and they're not doing very much at all, not going up, not going down, and not paying a dividend, yet they've got a world-class aluminium producing facility.
So, yeah, very good point. Alumina's an interesting one. Just having a look at a few brokers and some movements they've made in their recommendation. Macquarie cutting to an underperformed target lower to 95 cents. JP Morgan, though, upgrading from underweight to a neutral and raising their target 20% to $1.20. So no agreement there.
Ian, you're quite right. I mean, it has been very, very quiet stock, but on a positive with that, one thing we look for is a contraction in volatility, and that's what you're getting now, because generally you get a contraction in volatility, then you get an explosion in volatility, contraction, expansion. So with this contraction, you can expect to see some kind of good solid move, hopefully up. But, you know, with the rest of the market starting to move in that direction, odds on it's probably going to be up. So, yeah, it's a little bit frustrating spinning the wheels, but this contraction in volatility is a very, very good thing as far as I'm concerned. So, you know, if we can get up through that sort of 112, 113 area, it might run up towards 140 again.
So, Nick, how do you measure that contraction in volatility? Do you use Bollinger Bands?
Yeah, the easiest way to measure it is Bollinger Bands. That's the easiest way to do it, or it's a standard deviation of recent price action.
We've got an email here from Peter from Adelaide, and the email is around Xero. XRO is the stock code. So the stock's been running quite hard since the IPO. What do the panel make of this one? Is it too late to get in on this story? Let's have a look at Xero. I mean, trying to get the stock price chart up, and if we can bring up this stock chart, it's an amazing looking graph, isn't it, Nick? Is it too late?
I've not heard of this one before, and that's a phenomenal looking chart. And the reason why I haven't heard it, it just doesn't trade any volume. So I'm not sure whether it's held very closely, has a small float or what, but certainly has trended very, very well. The one thing I do note with the stock is that when it does have a few down days, they're pretty nasty. You can see the stock drops 25-30% in a couple of days, then recovers, but looks like a pretty volatile ride. And again, that would be from lack of liquidity. So we just don't play with these kinds of stocks for that exact reason, because the day you need to get out in a hurry, you're going to be panicking out.
I mean, Nick, looking at a lot of the trading ideas that have come up tonight, and a lot of them are in the material space, is this where a lot of the buy signals are coming from at the moment?
Yeah, over the last month or so, I've gone from 85% cash to now fully invested, all in that small cap area. And that's a function that area is moving. As I said right at the start of the show, it seems to be the energy stocks started to get going. It now looks like the gold stocks are starting to get going. What we do tend to see after big major corrective movements such as the GFC, when confidence comes back into the market, people tend to go to the high street names like the Woolworths, where they actually see a business right there. And once the confidence comes in and sentiment increases, then they tend to go further out the curve. And I think we're finally starting to see that part of the market move. The small ordinaries has been in an absolute wasteland for 4 years, and it's had a good couple of months, or a good month, and it looks like it's potentially going to follow through. So it could be very exciting times for the next 6-7 months.
And so that's a really good sign for the market. Nick, with a good point, that we've moved from a lot of the large cap stocks running hard to some of the smaller cap stocks, and that's a sign that, you know, the market, instead of focusing in on risk, is focusing more on return, and that's a positive sign for the Aussie market. On that note, it's been a lot of fun, but that's all we have time for today. Thanks so much to our guests, Peter Escher from Invest, and also Nick Radge from the Chartist. And to you, our viewers, for all your calls and your emails tonight, thank you very much. Until next time, I'm Julia Lee from Bell Direct. Have a fantastic night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.